My next guest is going to try to talk us off the ledge a little bit. Kathy Bostjancic is chief economist at Nationwide Mutual. Kathy, it's interesting that we're already jumping ahead to these questions about a recession when really we have to first address the slowdown. Is it happening now? Is it happening in the back half of the year? What do you think the data are telling us?
Yeah, hi, Kelly. Happy to join you. Well, yeah, there's a lot to digest. I mean, if you just look at the current data, we are not on the precipice of a recession. Like the employment data on Friday really put to rest some of those concerns, right? We had a solid employment gain, and income gains were also very healthy. And that means there's wherewithal income for consumers to keep spending. Now, that all said, markets are forward looking, and there are big policy changes being put in place by the White House, or at least, that's their goal. And what people are getting spooked about, the investors, is that Donald Trump and Treasury Secretary Bessent have indicated there could be some short-term pain before we get to long-term gain. And I think investors, consumers, businesses are trying to understand what policies will actually be implemented and how much, short-term pain do we have to go through. And I think the other thing is the markets and we, to a degree, in our baseline view, assume that there is a Trump put. The previous show was talking about the Fed put, but it's really the Trump put, meaning they wouldn't push things so far to engineer a real deep, downturn or recession. And now that's being questioned whether that's true or not. And are they going to look through the short term to get to their long-term gains, which is really completely redoing international trade and economics and geopolitics.
Right.
Really
and unless they're not. I mean, Kathy, are you in the camp that this is a re-engineering or that it's not? That's one of the areas where investors feel a little bit uncertain, because every time we back down from a tariff announcement, then it feels like, well, then there's not a re-engineering taking place here.
That's right. It's not clear, right, at this point, because I think the stop and go on the tariff fronts, I think their long-term goals are still in place, but then maybe there's some wavering as to, well, how quickly do we want to take this? And in government, job layoffs and cutting spending, all of that's restrictive, even immigration restricting that. And what's happening is you get the kind of anti-growth measures before you get potential pro-growth, right, from deregulation or tax cuts. That really comes next year. And so that's the problem. You don't have the cushion in the near term. And how far do they want to push that, I think, is the question.
I think Steve's consumer sentiment is super interesting right now as well, because the UMich survey has been quite negative, and then others a little bit more constructive. I think a lot of the anecdotes that people are experiencing from the DOGE cuts are making them feel as if their livelihood or a service they depend on is under assault, and that they're sort of extending that to recession, even if the top level data right now are still hanging in there.
Yeah, and let me remind you, Kelly, what I had said back when that weak economic data came out in January, because I'm going to contradict myself. I had said I wanted to wait a month to see the February data. Well, we have some February data. Of course, we have the government's retail number to come in. And it is weak, but it's not off the charts weak. And I want to remind you something that Kathy kind of alluded to there. Consumers have the wherewithal to spend. We had a nice bump in income in the month of January, but spending trailed off and the savings rate went up, which is a sense that, hey, people are being cautious right now, but they still have the wherewithal to spend if we can maybe get what appears to have been at least something of a weather issue behind us and some of this concern out there about the economy and the policies. But one other thing that causes me a bit more concern is this. When you have downturns or recessions, one of the circuit breakers is government spending. Well, this administration is going right after government spending as part of its programs or policy. So it seems a little bit like we're headed into some softness without a net, so to speak. Now, hopefully the Fed can step up if the tariffs don't cause a more widespread inflation, and it looks more clear to the Fed that what we're talking about here is decline in aggregate demand.
Yeah.
But if you have an inflation problem, it's going to stay the Fed's hand. And on the other hand, you'll have this federal spending decline that could add to the weakness.